Hey everybody, this is Jameson Melby here with RE/MAX Results, and we're here for another episode of the Joel and Jameson Show.
I'm Joel Gray. I'm with Citizens One, and glad to be here again. You know, obviously, big weekend coming off the Vikes goal. I mean, that's huge, right?
That was incredible.
Stefan Diggs making that play. I was sitting at a Wild game with my son, and just couldn't believe it when that happened. It was a pretty exciting moment.
25 seconds.
Yeah.
That's all Case Keenum needs.
That's
25
right.
seconds. All right, should we jump into the show, Joel?
Yeah, absolutely. You know, we're going to go back to a little bit of a Q&A here again. So we're going to bounce some questions off each other and go from there. First question up here for you, Jameson. When do I need to get pre-approved to buy a home?
Okay, so before looking at houses, you have to get pre-approved. Now, the reason for that is you want to know exactly what you can afford so that when you go to look at houses, you know that you're looking in the right price range,
Yep.
right? There's nothing worse than having to dial back expectations after you found a home you like. So get pre-approved before we look at houses. You'll want to meet with a lender like Joel,
Yep.
who can go through your financial situation, find out what is affordable for you, interest rates, things like that, and just get you up to speed so you're an educated buyer and you're ready to buy when you do find that right house.
Absolutely. How often do they come to you? How early would you say do a lot of people?
Well, sometimes they want to look at houses right away, or they've come to an open house, and what I talk about too is starting with a consultation with either yourself or myself.
Yep.
That can be interchangeable, so we can explain the process, but really meeting with us in the office, getting pre-approved, getting a game plan together, looking at houses, that's the correct way to go about the process.
Yeah, absolutely.
Yep.
Great answer.
Yeah. So one question we have here, Joel, what are the differences between the main loan programs that we have access to?
Yeah, absolutely. You know, it's a great thing about being a buyer in today's era is that there's multiple loan programs for you. You know, you got anywhere from a conventional loan, we're still doing FHA loans, you have VA loans, and in certain rural communities, you have USDA loans, and it all depends on what you're really looking to do, right? So you have somebody with certain qualifications, you know, we would look at that and see which loan program best fits. The one thing that you don't want to have is when you call a loan officer is you're not presented these options, right?
Right.
You know,
Right.
It's just a one-track mind. At the end of the day, myself and really good loan officers, we're trying to fit the best program for you and your situation and your financial goals, right?
Yeah.
So we don't want to put you in something that maybe necessarily benefits us the most. It's all about the customer.
Yeah,
So,
yeah, certainly.
We talk about it and we present these options for those people.
Right. So how about the people that might not have a down payment for the conventional or the FHA?
Yep.
What do they have open for them?
Absolutely. So, you know, other than the 3% down programs, 5% down that you can do on conventional or 3.5% down on an FHA, VA loans, 0 down. So you can do 100% financing, which is tremendous for the veterans. Proud to be able to provide that to people that serve us and put us in our spots today.
Right.
Secondly, kind of falling back, there are USDA loans that offer 0 down payment and can help also cover some costs with down payment assistance programs.
And now the USDA, that's in the rural
correct.
communities, correct?
That's
like
correct.
Population
Absolutely.
limits?
That is correct,
Yep.
absolutely. And a good way to look for that is either you can usually search online, and then also contacting your local real estate agent that's doing a lot of transactions in that area, as well as loan officers too.
Yeah, definitely.
Absolutely.
All right.
Moving on here, this is always a tough debate. If I have poor credit, what can I do to get my score up? How quick can I do that so that I can get into a house?
Yeah, so the biggest thing is, like I said, meeting with the loan officer, but what we want to do is pull your credit score, see what the bureau is showing. If you have things that are derogatory, you're going to want to get those caught up because I've mentioned this before that the bureau, the way it works is it shows 30 days late, 60 days, 90 days. So you want to make sure that you make those payments on time.
Yep.
If you have student loans, credit cards, car loans, home mortgage, if you currently own, make those payments on time. Get anything that's derogatory caught up.
Yep.
And then if you don't have credit, let's say, you're somebody who doesn't, then you want to open a secured credit card, get a second credit card, make those payments on time, so we start showing a history that you're able to repay a loan, because you can imagine the bank, they want to know that somebody's going to repay that loan. So that's really huge.
Absolutely.
And then two, if the credit is really bad, you have a lot of collections, a lot of derogatories on there, We have credit specialists that we can refer you to who can help you challenge some of those, come up with a plan to get that credit fixed. It might take a year, but it could be less. So
Absolutely.
we have plenty of options there for
Absolutely.
people in that situation.
That's a good,
Definitely.
That's a good answer.
Yeah.
It's a hot topic, so that's good.
Yeah, yeah. I mean, and there are people in that situation,
It is.
and we can help.
And the timeline of it too, also, you can do it quicker than you think too, right? If you get a plan ahead, right? It's all about developing that plan and sticking to it, and results come quicker than you can think.
Well, and the thing too, I've told people, that if you do it now, you take care of it now, later you'll be able to buy a house.
Absolutely.
And what happens because it's natural for people to want to forget about the problem, just let it go. Well, then in a year from now, you could have bought a house. But if you haven't taken action now, you're not going to be able to buy in a year. So why not get that credit fixed now, work on it so that you can buy, when the time is right.
Absolutely.
So, Joel, we talked about the loan programs. Now, a lot of people talk about mortgage insurance. What is mortgage insurance, and then how can you get it off of your loan if it is on there currently?
Absolutely. So there's a number of different factors that go in with that. The most common one, obviously, is if you do not put 20% down on a home, you're going to have mortgage insurance.
Yep.
Right. Typically. There are some lenders, myself included, we do have portfolio loans where we do have down payment without mortgage insurance. You have to speak to your loan officer to figure out what those are. But mortgage insurance, typically, it's going to stay on there until you get your loan to value to around 78%. FHA is a little bit different. Depends on when you purchased your loan and where that is. And same boat, you can have it removed. Typically, if you purchased your FHA loan prior to 2011, now it's pretty much on there for the life of the loan. But yeah, it's what it's doing is it's protecting the lenders and the investors because you aren't putting in a substantial amount down on the house.
Right.
Yep.
So basically, the reason is if you put 20% down, the odds of you walking away from that house are much less than if you were to have a zero down, for instance.
Absolutely.
Yep.
Absolutely. So Jameson, if I'm not looking to buy a home for a year, right? What can I do for myself to be prepared?
So some of the biggest things would be saving money. So if you can, 20% down saves you the most money through not having mortgage insurance.
Yep.
Your payments are lower. You're going to feel better about that. Now, if you can't, save as much money as you can for a down payment, and then the loan officer you meet with can go over the different products and see does one FHA or conventional make sense. How does that affect your monthly payments?
Term, right? Term, 15, 20, 30 year or an ARM.
Huge difference. So saving money is the best thing, and paying those payments on time. Like I said, they look at 30 days late. If you're 30 days late, that's a negative mark. So make sure you make those payments on time. And if you need an extra trade line, which is a student loan, credit card, something like that, your loan officer can tell you, what you should do to be prepared for buying a house in a year or two.
Absolutely. And then those scores, those credit, you want to keep your payments, 30%, I believe, of the total balance?
Yeah.
So anything over that starts to take ticks as
Yeah.
well. So keeping it under that is great.
Yep. So another thing kind of leading into this, how much money does somebody really need to buy a house?
Yeah, absolutely. We were just having a conversation about this here before the show. You can buy a house with as little as $2,000. It just depends, right?
Right.
USDA loan or down payment assistance.
VA would be an
loan,
option.
right?
Yep, for low money down.
Yep. So it really depends. I mean, it's kind of a broad question, but it's a good question because I think a lot of people realistically think that maybe they can't afford a house.
Right.
But you'd be surprised, right? Obviously, there's a lot of factors that come into play, but for a down payment aspect, like you said, you want to make sure that you're saving. And typically, you want to try and get 3, 5, 10% or more down. So whatever you're looking at for your purchase price, that's what you got to factor in. And then also, another thing that's commonly ignored by homeowners is you've got to remember closing costs too. So if you're not going to get them covered by the seller, which coming up into the hot market here, right? It's going to get intense in the spring. It's always kind of, you can get bidding wars sometimes. If you are not asking the seller to pay for closing costs, that's huge. That's a huge win for you.
Yeah.
So having the down payment, and having the money to also cover the closing costs, which is typically anywhere between another 3 to 5%, depending on where you live and taxes and whatnot.
Yep.
So you got to keep those into factor as well.
Yeah. So if you're looking at let's say a purchase price of $300,000, you're going to need minimum $9,000, anywhere from $15,000 to $20,000, depending on
Yep.
down payment, closing costs, like we said. So again, if you're a veteran, you can get away with a lot less money. The government takes care of you that way. So really, really good options there.
Great question.
Yep. So another question is, what is earnest money and what is it used for?
Yep, earnest money. It's maybe second to a couple other questions, might be the most asked question during the process.
Right, yes.
Earnest money. So essentially what you're doing with this is it's just solidifying how interested you are in that property and how committed you are to doing it. So the higher the earnest money, the more probable is that seller knows that you're either qualified and or interested in that property. Typically, you want to go probably about $1,000 for earnest money. I've seen as little as $500. Just depends.
Yep.
Like I said, the higher the better, but typically that average range right around $1,000. The other thing about that is that does then go towards your closing costs off your bottom line at closing. So it's not just sitting out there. I've seen it where people put out an earnest money of maybe $1,000 to $2,000, and then they don't have it. At the end they just rip up the escrow check and then they end up choosing it. But a lot of people just leave it on there. It'll show up on your final closing disclosure and reduces your bottom line.
Yep. Yeah, and I've had quite a few people with the zero down VA loan where they put $1,000 earnest money, $2,000 earnest money. We have the seller paying their closing costs, so that could be anywhere from $5,000 to $10,000.
Absolutely.
And then they end up getting a refund at closing.
Yes.
So
Common on VA loans, for sure.
you walk away with a house, you walk away with money in your pocket.
Yep.
Do that renting. Not going to happen.
I know. We also I used to work in the relocation business, and we would have that a lot. After certain companies would cover, they'd get some money back at closing too. Just phenomenal.
Good deal. Buy a house and get money back.
Absolutely.
Yeah, we can figure it out for you.
All right, moving on here, Jameson. If I want a deal, are foreclosure and short sales a good sale?
They are, yeah. So foreclosures right now, 2018, we don't have nearly as many as we did back in 2010, 2012, those areas. So we certainly can put you on auto searches to find those foreclosures. There's websites like HUD Home Store has all the HUD houses. Fannie Mae, Freddie Mac, they have websites you can search for those foreclosures. But word of caution, there's a lot of investors competing for those same foreclosures. So they're coming in, they're paying cash, quick closes, things like that. Now, short sales are interesting because it's a longer process. I mean, you could write an offer today, you could be in that house in 3 months, 9 months, a year and a half even.
Why is it so long?
It's a laborious process with the bank. I mean, there's all this paperwork they have to do. If it's a FHA, USDA, they have to have them approve the short sale. So not just JP Morgan Chase. You have to have a federal government approve these. So it takes a long time, and there's so many factors with short sales where a lot of buyers don't have the time to hold on and wait. So if you're a situation where you don't have to buy within a month or two, you have a phenomenal chance to get a really good deal because the banks are willing to sell them under market value. So they have an appraisal done, and they tell you that they'll sell it for X percent below market value. So you don't have nearly as much competition on those short sales. So settle in for a very long process.
I have one going on right now.
It's crazy.
He signed the contract almost a year ago.
Yes.
And that's another good reason to, if you are going down on that path, to really talk with your loan officer and realtor about what to expect.
Yep.
That's where proper expectations are huge, because you got to just think about, I mean, you're going to have to repull credit a couple times probably.
Yep.
Only good for 120 days.
Yep.
Updated statements, all that kind of stuff. So it's a drawn out process, but phenomenal deals can be made off of it.
Yeah, certainly. So you want to make sure to get inspections, get a home inspection done. These houses are being sold as is, so you really need to check in, have a professional check these houses over, make sure what you're getting is a good, solid, safe house. Definitely.
Absolutely.
Yeah.
All right, Jameson, who should I contact to get this process going?
Great question, Joel. So if you're looking to buy a house, Joel is a loan officer. Again, I'm a real estate agent, so you can meet with either one of us in our offices. We go through a consultation with you educate you on the process, more importantly.
Correct.
So you can get in touch with me. You can find me on Facebook. If you type in Jameson Melby Remax, I pull up jamesonmelby.com. Cell phone number 651-764-8933. And how can they get in touch with you, Joel?
Absolutely. So my phone number is 507-398-5830. My email address is first name Joel and then .gray, Gray, at citizens1.com. Either of those two are probably the best method to reach me. I'm also on Facebook as well. I pretty much answer whenever is needed, you know, unless it's late hours of the night. But for the most part, I'm pretty responsive, and I know Jameson is as well. We'd love to have you guys reach out to us, even if it's just for comments or questions. Maybe I have stuff coming up here on our show that you want us to answer for you. We'd love to get that. You know, when we post these on Facebook, you know, if you can comment, share, or like, we really appreciate that. Gets our word out. We're here for you guys so that we can educate and hopefully, you know, create a relationship long term through your house buying process.
Yeah, sounds good. Appreciate it. Well, we'll see you guys next week. We hope you enjoyed the episode, and make sure to tune in. And again, like, share, comment on these videos. Helps us tremendously.
Hey, go Vikes on Sunday. Go Vikes.
Go Vikes. Have a great day.